Hello, this is the Chartprofit webcast. Just about 3 hours into the trading day on Friday, 31st of July. This is from the pre-open today. Last update was on 23rd of July. I wrote that time spent at 2107 and 2095. They're very close in time, and as points of control, they're both important to monitor. And I've written today this is still very much the case. 2095 being here, and 2107 up here as resistance. I've said that price printing time above that level would be a big positive. Up here would be a big positive. We'd be looking for a breakout higher should that occur. Let's hope for next week. Here's a live chart, just a 5-minute chart showing the two levels. We just mentioned 2107 up here. Actually just opened just a little above it, but you can see it's been here as well, resistance. Should we see time printed above here into next week, that would be a big positive, I think. There's the same two levels on the auction chart over the last few weeks. Late last week we had aggressive selling here, and the market has bounced back, and we're now seeing buyers aggressively auctioning the market back to this area here, these points of control. So this is kind of an area of value here, and what we're looking for, ideally a higher low above that level, which is usually a bullish pattern. So let's look at the breadth, let's look at the sentiment. Auction chart looks like this. The breadth could definitely do with improving. We've seen throughout June, July, pretty unsupportive breadth here. The price momentum has improved, back in positive trend. So price ever hopeful, and you can see the imbalances of the profile here in green and red, and the spider at the top here. Here's the important level on the spider, which is peaking above there at the moment. Looks like this on the live chart. So we're closing the week on a high for the week up here, hopefully. There's another 4 hours yet, but if we can get a strong close to the week above the 12-month, which is at 209.92 in here and has been for a while, we can look for support off that next week, hopefully. Do need to see that breadth improve though. Been a little disappointed with the performance of the Russell 2000. This is IWM, the ETF. Earlier this week we saw a test below the April low, and we're having a reasonably good end to the week. But there's resistance here at 124.50. You can clearly see that this is underperforming the large cap, the spider. There's also resistance if we look at the half range of the June high to the July low. This dotted line here. So this is an area of resistance. Price above there would be encouraging. The diamonds, the Dow ETF, there's plenty of overhead resistance here as well. There's the halfway point off the May high and the 12-month point of control at 180. Of the 4 stock index ETFs, the relatively the strongest, the leader, the Q's at the moment well above its 18-month point of control here, breaking out mid-month here. We'll look at the sentiment. This is the Ridex assets ratio, my version of the Ridex ratio. Mid-July here we hit an 8-month low. Retail Ridex traders more bearish at that point than they've been for 8 months. Which I said at the time is kind of encouraging, kind of comes in here somewhere. Remembering these are contrarian indicators corresponding to an 8-month low here on the bull fund assets in isolation that I follow. And in the public poll from AAII this week, the bulls percent was actually sharply lower at 21.1%. So just 21.1% declare themselves bullish. 7 weeks ago, that number was at 20%. That was a 2-year low, so very close to a 2-year low in the bulls percentage. Bears percentage was much higher this week at 40.7% from 25.6%. That's a big jump in bears this week in this poll. That's the highest bears percent since August 2013. And the net, the bulls minus the bears, at 19.6. That single red histogram over here, that's the lowest for more than 2 years. So the participants in the public poll declaring themselves more bearish than they've been for 2 years at the moment. And we're getting some bears in the investors' intelligence poll as well. Bulls percentage was lower at 43.3, that's the lowest since October. Bears percent was higher at 17.5, the highest since October. The 4-week moving average in yellow here of the net, the bulls minus the bears, we follow this number here in yellow, and that's 31.2 currently down here. That's also the lowest since October. Just to remind you, looking back at October, that was the market low here, corresponded to a deep low over here in the exposure index, which is a measure of current equity exposure of active money managers, and we're seeing now with a number here this week at 50.75. That is now the lowest reading from October. So there are some bears out there currently. There was a $1.8 billion, not massive, but an outflow, net outflow this week in the data reported from Lipper US fund flows. That's equity fund including ETF flows, negative 1.8 billion. This indicator pretty neutral at the moment. We follow the 4-week flow in yellow as well, currently pretty neutral. Two sectors we've been following recently, the financial sector, this is XLF, the major point of control at 24.25. Early in July we saw a probe which was quickly rejected below that level, and then a really aggressive rally from there, breaking out sort of mid-July and not far off that point. So this is one of the strongest sectors at the moment. And we looked at this chart for technology, XLK, and we looked at this, which is consolidation above two major levels, the half range, the dotted line here from the high back in 2000 to the subsequent low. So this is all of this price action here is in a strong price location above that halfway point, and then we have the major point of control at 40.25. Here on the daily chart, so all of this price action on this degree in a strong price location, and then we look at the really minor a little halfway point here, and we're finishing the week above that level. So these two financials, technologies sectors looking pretty strong relatively. Quick look at Europe. This is the stock 600 trying to, well, it's finished the week here, just struggling above its minor point of control, but above this halfway point as well. So this rapid recovery early July here, and the dip, but as long as we hold above 396, this will be a much stronger looking chart than it did at the start of July. The German DAX finished the week here, not so strong, below its point of control and below its halfway point. Here would be much better, much stronger price location. Two levels on the FTSE 100, 65.60 down here, which has been probed here and here, but currently printing or finishing the week above that level, but there's still overhead resistance around 6800. That's the major point of control here. These two levels pretty similar in terms of time and importance. This is a proven level. In mid-July here we saw resistance, so we would quite confidently say that price above that level, above 6800, would be strong. Supporting charts, this is T-bond ETF TLT, the big level as we know at 117.14. All of these levels updated, very few have changed if any, so this remains the major point of control. We saw throughout June and July this sort of oscillating, building that point of control further. It's been the major level for quite a while now. What we were looking for to anticipate further weakness would have been a clear lower high below that level. We haven't seen that. In fact, TLT has had a fairly strong bounce from there, currently printing its highest level since late May, early June. Price oscillator has actually turned positive and is moving higher, so technicals look pretty good, and we didn't significantly breach this level as it was across this entire period here. So good that it's found support here or in the region of this point of control and hasn't significantly breached it or printed much time below it. The RSI at the top, just playing around with its upper Bollinger Band here, anything above 70 technically overbought. That might be quite interesting, but currently not interested in the long side, probably more looking to sell this rally. We'll look at GLD, the gold ETF. Last week printed its lowest level since early 2010. Been, as you know, if you've been following the webcast, extremely negative, or certainly nothing like positive on the precious metals for a long time. But the sentiment's starting to look interesting, really getting to the point where the public, this is the Ridex Precious Metals assets. So in the Ridex Precious Metals Fund, the assets are at an extreme low down here and have now broken this previous level. So almost to the point where everyone's starting to hate gold, and I'm seeing a lot of negative commentary. If you watch CNBC and the like, you'll see a lot of the commentary is suggesting now that gold has a lot further to, the bear market has a lot further to go. I need to check the commitments of traders, data, and some of the other sentiment indications that I follow, but it's starting to look interesting now. I can certainly justify around about this level why we might see a bottom in gold, GLD. Would certainly want to see the price oscillator back above zero, and we'll take a look at cash gold next week. What's sort of interesting to me is the SLV, the silver ETF. We've been talking about a new low, which, you know, for months, which has obviously happened now. But SLV can't justify a low at these levels currently from the distribution analysis. So they have a tendency to move together, and if I was buying one and shorting the other, it would be short silver, long gold. And that long would be speculative based on sentiment. The safe buy is much higher up here. And even speculative long would want to see price oscillator back above zero. That could take a few days, even with a strong rally in price. Oil, USO, still looks like a really weak chart. I said in previous webcasts, you see a low, you always, if you then see a rally, you always draw in that halfway point, which comes in here. So this puts the chart in a really weak price location, obviously below its 16-month point of control as well. You at least want price doing that kind of thing. Imagine as soon as it did that, you're looking at the possibility of testing this low, which is almost done. We'll finish with the Forex charts. The Australian dollar, major point of control in red here at spot 76. Much support on that point of control, which goes back a long way, years. And we said that if we see price breaking below that level, that would be extremely weak. And we are in a downtrend here, and it's not a particularly supportive chart for gold. These two very correlated. That's gold, GLD in the black bars, and the red line, the Australian dollar, US dollar. The pound is still having difficulty with the resistance at the 12-month point of control at 156.70. I mentioned there's plenty of overhead resistance. A major half range up here was probed back in June, and currently we're below 12-month. Dollar looks pretty strong here. This is the yen, the dollar yen chart. And finally the Euro FX chart from this low in March to the high over here in May. Here's the halfway point. We're kind of printing around there at the moment. Not significantly broken down here, but we are below the 12-month point of control at this level. So there's still, to my mind, nothing like a bullish chart. Most of that looks pretty good for the dollar, therefore not wonderful for commodities, including gold currently. Okay, what are we looking for next week? We're looking for, hopefully, this is the positives. We're looking for this to change, the breadth to improve. Buying marked above 2107 on the September E-mini S&P. At least some time up here would be another positive. Those are the first two things I'll be looking for to turn a little more bullish, and obviously price back below 2095 is not what we want to see. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.